person's an actual person.
All right, that would be fine. I also had the surprise payroll payoff. but Amanda's is fine too. Someone other than a person working in payroll should distribute the checks. Checks should not be returned to the payroll clerk after signing. Number 6, select a sample of 6, in withholding payroll taxes from employees, the computer operator, oh, this reminds you of a real life situation, deducts 50 cents extra federal income tax from several employees each week and credits the amount to his own employee earnings record.
Wow.
There was a situation back in the 80s where somebody hacked into the bank accounts at first. I think it was still First National Bank of Chicago at that time, and they basically took the cents off. So the maximum amount somebody could have lost was 99 cents, the minimum 1 cent, 1 penny. But for all the accounts that were hacked, that actually added up to a large amount. But the person probably wouldn't complain that much because it's less than $1. It's not worth me protesting. So if there should be internal verification for Part A, internal verification of calculations and amounts. This is 6A. Internal verification of calculations and amounts. 6B, recompute federal withholding taxes, recompute federal withholding taxes, and trace to the employee earnings record. Recompute federal withholding taxes. What is it? Is it Circular E that has all that in it? And trace to employee earnings record.
That's crazy because, like for 50, well, depending on how many employees, if the amount's immaterial, I mean, just in my experience, people just don't worry about it. Like, oh, it's, you know, it's not on to the penny, you know?
Right, right. And number 7, the payroll clerk manually prepares payroll checks, really, but often fails to record 1 or 2 checks in the computer-prepared payroll journal. I can think of one thing. They have down, this is kind of a weird one. 7, they said payroll checks should be pre-numbered and accounted for.
Payroll checks should be
pre-numbered and accounted for,
yeah.
And use an impress payroll, payroll bank account. Use an impress payroll bank account. That's for A. And B, reconcile the disbursements in the payroll journal. Reconcile the disbursements in the payroll journal to the payroll bank statement. Reconcile the disbursements in the payroll journal to the payroll bank statement. Oh, 26 is short because I want to go to a new chapter. I'm payrolled out right now. But 2026 has only got 5 issues. Page 678, 678, 20-26. They want a transaction-related audit objective that wasn't met and a control that would prevent the misappropriation. It's page 678. Number 1, the payroll clerk submitted payroll information for a fictitious employee and had the funds deposited in his own bank account. Boy, we've already covered this. Occurrence for A. Okay, it says for B, only HR, which is separate from payroll. Only HR, which is separate from payroll, can add employees to the payroll. Only HR, which is separate from payroll, can add employees to the payroll.
What if, no, never mind.
Okay, 2, an employee adds 10 overtime hours that she did not work to her time record each pay period. Accuracy for A and B, and you might have this. All payroll hours, especially payroll overtime, must be approved by the supervisor. All payroll hours or payroll overtime hours must be approved by the employee supervisor. I know there are some companies that will, overtime is only allowed if somebody authorizes, signs off on it. 3, 2 factory employees have an arrangement where each one will take each Friday off, and the other employee will record their time worked so that the absent employee will still be paid. Accuracy. B, we've had this before. Supervisor must approve all time records. It says require, let me mention, they have one more part for B here. Let me see what you think. Require employees to sign in using a personal identification. Require employees to sign in using a personal classification. Does that mean like having a password?
Yep.
But what if Letitia and I have this arrangement and I actually give her my password?
Fingerprint.
Yes, I've heard there are those now where you have to put a thumbprint or something there.
But it depends on you. You can only use that password logging in your computer, your workstation.
Okay, all right, so that might stop because then it would be a different one. All right. And number 4, a supervisor does not notify HR that an hourly employee has left the company and he's still submitting time records and getting checks and they're splitting and all that. 4A is occurrence. 4A was occurrence or existence if you prefer that designation. B was required notification of HR. Require notification of HR on termination of employees. Require notification, in other words, of HR when employees are terminated. They'll take them off the active employee list, I guess. Surprise payroll payoff appears again. Surprise payroll payoff.
I was gonna say, what happens when you work for a small company and HR is payroll?
Well, that's the trouble. That's why a lot of these are ideal situations. But even companies that are medium-sized, that are cutting payroll, are combining functions.
Yeah.
So a lot of this internal verification and stuff doesn't really exist, or separation of duties, does it? Even here at the school, they have pretty good controls here, but they've cut out certain positions. So some of those little like firewalls in between things have been eliminated now. So, and number 5, the payroll clerk increased his salary by $100 each pay period. After a few weeks, he also increased the hourly rate for a friend who works in shipping. Accuracy for Part A, and for 5B.
HR is separate?
That's right, HR function should be separate from payroll, exactly. And they talked a little bit on Part C. There was a Part C, by the way, about the surprise payroll payoff, but we've said enough, so I think that's plenty.
So we're not doing that, right?
We're not doing that Part C,
Okay.
so you can leave that out. Okay. Now, what I want to do, first of all, I want to just pass out answer keys, and I'm not testing this area, for Chapter 15 and Chapter 17. These will not be on the exam. I'm hoping these won't be on a CPA, but if Becker goes, if there is something on, those sampling, that statistics stuff was really heavy duty. I would be hoping that Becker would go over anything of that nature. So you don't have to submit anything for 15 and 17 as far as the Dropbox. Do not submit, but here's answers to those questions. Do you want an extra set here, or you're not?
Please,
Okay.
I know where he lives now, I can drop it by.
Okay.
Did you pass out anything last week?
I don't think there was anything, or was there? There
So
might.
it's only 5.
I don't remember.
I don't remember now. I can't recall.
And I have one more. Now, chapter 14 and 16 I want to talk about together because they relate to one another.
So we're only dropping these 2 chapters?
Yeah, those 2 chapters don't put anything in the Dropbox or anything, and they're not going to be tested.
Okay, cool.
So when the course is over and you're bored or something, you can look at it then.
These are just the answers, right?
Just the answers to the problems, right? The chapters are real heavy. But I want to talk about 14 and 16 in collaboration because I don't know why they're separated. They both relate to the sales and collection cycle.
So we're just taking notes at this point, right? Nothing for the Dropbox?
For the Dropbox, there would be problems in 14 and 16
Okay,
that we'll
14.
look over.
Okay.
Nothing in the Dropbox though for 15 and 17. Now I want to go through the 2 chapters, 14, and I want to point out some highlights in 14 and 16. Then whatever homework problems we go over will
Okay.
be for the Dropbox. And I'd like to get us started to the chapter after that, but we'll see. There's so much material here for the course, I can't believe it. But just think, no extra tuition charge, and you get all this extra material. Now, a lot of now the chapters these 2 chapters are well written, but you could read on your own. I just want to point out a few highlights, then we'll look at the problems. First of all, on page 449, figure 14-3. Isn't that beautiful? Look at that thing. Here's a very elaborate flow chart for the sales and collection cycle.
Bill, is it okay if whatever we select, we can print these flow charts out and include it in our...
Yes,
Okay,
please.
okay.
And you're going to bring in a hard copy in that Monday night, yes.
Hold on, we could use this, or you want our own?
No, I want your own. But you can certainly use these as
Yeah.
examples.
Yeah.
Use as examples. You maybe make a few modifications or something like that, but yeah. So these are just examples, don't use Hillsburg hardware, but this is a rather elaborate one. I've had some students actually had some at work, they could just pilfer, but I've had some actually people prepared their own.
Yeah.
Some are a little bit more simplistic, but that's fine too. Now, let's take a look at page 452. Again, here's one of those infamous tables that's in every chapter. It's in every chapter, but it gives us some examples of audit procedures. Now, this one here, as you can see, is for sales. There's another one in this chapter for cash receipts. So I want you to look this over. Now, for example, they show the test of controls here. Examine customer, this is page 452. Examine customer order for evidence of credit approval. Examine sales invoice for supporting bill of lading and customer order. Think of it, that's why the flow chart's good. Customer order. Then we get the bill of lading with the shipper. Then we're sending out a sales invoice. One internal control is sending out statements to our customers. Why is that valuable when we send out? What's the difference between sending out an invoice, let's say, and sending out a statement of a customer's account? How do those relate?
Well,
Go ahead.
well, it's typically the same thing, just a summary of everything they owe.
Well, one is a summary. See, the invoice is for a single transaction.
Right.
The statement, though, shows, like you're saying, Amanda, all the activity. And if there's something erroneous there, customer of your client will probably complain. So,
Okay,
that's why it's kind of valuable to have that type situation. And you would want to, as an auditor, also to investigate any complaints that customers of your client had relating to the amount that they owed. In other words, they got their statements of what they owed your client, and they disagree with the amounts. Now we're going to see a little bit of that with the account receivable conference in the next chapter.
What would be an erroneous example?
You're saying that I owe $10,000 and I already paid $2,000. I only owe $8,000. Now, we're going to do some of that directly ourselves because we're going to send out account receivable confirmations, and those get sent out by us. But when your client sends out statements, they send out invoices, you know, when they ship goods and things, but they also send out maybe monthly statements of the activity. If there's any variations there, these need to be followed up on as well. They're also talking in this chapter about, do they have the correct price list? That came up in the homework. Are we using the authorized price list? Well, here's something, an example. I drive the Honda most of the time for obvious reason, but I have a couple old cars that have huge V8 engines. They still have carburetors. It's the old technology. They take premium gas. Well, I was at the BP last week and premium was $3.71. I was there yesterday and it's $4.26.
Ridiculous.
Went up over 50 cents a gallon.
You know
so I went to Shell, they were $3.99.
But you know what I don't get? It only impacts BP. Why are the rest of the other?
Yeah, Shell was
oils
26 cents a gallon less. So as I got the Shell, the V8, you know, the
you know, anything
maximum
that
one.
passes to raise the price, they don't figure out anything. They'll
Well,
say,
what they always make up an excuse.
Yeah.
Usually it's a fire at the BP refinery in Whiting.
To raise the price.
This time they claimed it was some kind of machine glitch or something, but it's just an excuse. One time I think they said this, let's say we have a metal can over there. Here I'm going to drop a match and burn a few papers in there. Oh, we had a fire. Oh, we got to raise the price.
Yeah, anything to make money, it's just ridiculous.
So I went to the Shell. I won't pay that. Now in the Honda, I often get premium and it doesn't need it, although it's a 6-cylinder. So I bought the medium grade the other day because I was at the BP. It was 10:30 at night and I didn't feel like going to the Shell, which is a few miles away, although it's open 24 hours.
I agree.
All right, so is the proper price list? Because oftentimes prices changes especially on certain types of commodities. They also have down in the substantive test, I always like to look at this. They have you looking for unusual amounts again. Trace sales journal entries to supporting documents, including, now think about the documents. Duplicate sales invoice, bill of lading, sales order, customer order. You know, there used to be a system, maybe you talked about this in a county called the voucher system. That applied more for the payment, but it required you to have certain documents. Same thing here, but now our client is the seller. Make sure all those documents are together and they all agree. Okay. Trace details again on sales invoice, the shipping document, sales order, customer order. A lot of repetition there. Also, watch out for classifications. Classifications. For example, if your client is shipping inventory to a third party, is that a sale? Or were they sending that inventory to a third party so it's there on consignment? So if that third party sells the merchandise, then they split the proceeds. So be cautious there. Now they also show in the chapter, there's the other exhibit I was looking for, page 461. This is the same type of scenario, but now it's for cash receipts. Cash receipts. And again, take a look at the test of controls. This is page 461, and also the substantive test of transactions. Let's just look at a few of these in the substantive tests. Trace cash receipts, we're on page 461. 461. We're just looking at a table. 461. That's one benefit of this location, where the vending is right next door. Although the washrooms are a distance. Okay. It says here, trace cash receipts entries from the cash receipts journal to the bank statement. Prepare a proof of cash receipts. Now, we did talk the other day about a proof of cash. I've never really done that much with that, but this would be a part of that. Obtain a pre-listing of cash receipts and trace amounts to the cash receipts journal. Testing the names, amounts, and dates. Think about the whole process here. Your customer sells, your client sells to customers on account. And then the customers of your client make payments, paying off some of their accounts receivable. Obtain pre-listing of cash receipts and trace amounts to the cash receipts journal, testing for names, amounts, and dates. So a little bit of repetition here, but making sure the cash that was received was correct. Now, I think we looked at this last week, page 462. 462. Again, if you are unfamiliar and you're thinking about the course project, figure 14-6. Here's an audit program for the test of controls and substantive test of transactions for the sales and cash receipts sequence. And go through these. This is very excellent for that particular cycle. Now the general ones are more compliance tests for controls. But for example, account for a sequence of shipping documents. Trace the selected shipping documents to the sales journal to make sure each one has been included. That was under shipment. Billing. Account for a sequence of sales invoices in the sales journal. These are the types of things that you would have in your course project. Trace selected sales invoice numbers from the sales journals to the account receivable master file. Test for amount, date, and invoice number. Trace to the duplicate sales invoice and check for total amount recorded in the journal, customer name, account classification. Check the pricing, extensions, and footings. Examine underlying documents for indication of internal verification. Check with the bill of lading and test for customer name, product description, quantity, and date. To the duplicate sales order, and remember these are those same documents we just saw on the prior page. And test for customer name, product description, quantity, date, indication of internal verification. And to the customer order and test for that same information. Trace recorded sales from the sales journal to the file of supporting documents, which include a duplicate sales invoice, bill of lading, sales order, and customer order. Again, repetition with the prior page, but here it's nicely laid out in an audit program. For the cash receipts and recording the amounts, obtain the pre-listing of cash receipts and trace amounts to the cash receipts journal, looking again at names, amounts, dates, and internal verification. Compare the pre-listing of cash receipts with the duplicate deposit slip, testing for names, amounts, and dates. Trace the total from cash receipts journal to the bank statement, looking for any delays in deposits. That's the idea of keeping the cash books open. Examine the pre-listing for proper account classification. Prepare a proof of cash receipts. Trace cash receipts entries from the cash receipts journal to the bank statement, again looking at dates and amounts. Trace selected entries from the cash receipts journal to the account receivable master file. Test for dates and amounts. And trace selected credits in the account receivable master file to the cash receipts journal and test for dates and amounts. So if you're choosing the sales and collection cycle, this will be very beneficial for you. They also talk in both this chapter and the next chapter about writing off uncollectible accounts. Most of that's in the next chapter, and I've also going to be adding that, I added that today, in fact, or yesterday, as a topic in the online discussion. Now let's jump ahead. We'll go back to that chapter to look at the homework, but let's jump ahead now to chapter 16. And I'm going to add some stuff to this, if I can. There it is. And this really goes to the same area. So let's talk about this and talk about confirmations and so forth. I love this chapter 16. Then we'll look at homework problems. They go through, I haven't gone through a specific one yet. I'm just paging through. Look at the analytical procedures, by the way, for this entire cycle. What would be, without even looking in the text, what would be a ratio or that we did in accounting classes that definitely would apply to the sales and collection cycle? What's one that we did in from 504 on? What's the ratio that we did? An analytical procedure, besides horizontal, vertical. Don't you remember doing the gross profit rate, for example? Or the gross margin rate? Well, that's one that's down here. The gross margin or gross profit rate. And they give a listing on page 524. What's an aged trial balance? What is an aged trial balance?
So all your invoices and how many days they are past due.
That's right, there's two ways, either past due or outstanding, yes. And they give an example here of an aged trial balance, of course, although you're probably familiar with this on page 527. Cutoff tests are important. Now, the cutoff test, and I put this as a topic, and I think one person addressed it, but some of you still have to do some posting, and I'd like to have more on this because this is an important area, to make sure items are recorded in the correct period. Now, part of it is based on the FOB terms. I know I'm going back to your basic accounting. FOB shipping point, FOB destination, we are now the seller. Our client is the seller. In FOB shipping point, when is there a consummated sale? FOB shipping.
When it's shipped.
As soon as it's shipped. That's why they often talk about looking at the date in which the shipping order, the last shipping order for the current year should represent sales that are recorded in the current year. The inventory should not be counted, the sale and the gross profit should be included. But if it's FOB destination, then we only recognize the sales revenue when? FOB destination.
When it's received?
Received, that's right, by the customer. And notice there, it might take a few days for it to get there.
Right.
So the sales cutoff test, obviously there might be incentive for taking sales. We're short of sales. We haven't met our gross profit goals. So some sales that should be recorded next year are being recorded this year. So obviously we have to be cautious in that regard. Also, they talk about the cash receipts cutoff, which we kind of alluded to in the cash chapter. Now, with regard to returns and allowances, I just want to comment here. Usually, if sales returns and allowances do not vary considerably between years, we don't do any special testing. We don't do special testing.
So if they usually...
If they stay pretty uniform from one year to the next. The issue is, remember we talked about this, I think in one of the accounting classes, stuffing the channel. I'm sorry, you guys didn't take the lower level accounting with me. Stuffing the channel. Does anyone know what stuffing the channel is? It's a way of overstating sales. Well, it's a way of doing it. What you do is you send out, your client sends out a bunch of unsolicited merchandise to their customers at the end of the year and records the sales. Let's say it's FOB shipping point. And then, of course, the customers of your client return all the merchandise the first week of January because they didn't want it. Now, if you have that situation, then you're going to have to make your client record the sale return allowance directly with the sale to which it related. But if you don't have that situation, traditionally, I always kind of let it go. Figure, well, it's all about the returns allowances are about the same as they've always been. So in theoretical, I guess it's a little bit off because it's not going back to the initial sale. They also show an auto work paper here, by the way, for the allowance account on page 531. Being that we don't get to do work papers in here, that's kind of an example for you. Now, the confirmations. Some of you have posted on this. What's a positive confirmation? What's a negative confirmation? What's a positive confirmation? What's a negative confirmation? Help me out, please. Lena, we need your help. What's a positive account receivable confirmation? What's a negative confirmation? Why does Bill prefer positive?
A positive is when you send them one and you say, please send it back either way, saying whether it's confirmed or not verified. And negative is when you say, if it's cool, you don't have to do anything, and you would prefer the positive one because, you know, if you send a negative one, they may not look at it, and so they don't send it back. So you assume it's okay, but you really can't infer anything from them not sending it back.
That is exactly right.
Woo!
That's exactly right. Because especially based on who your client's customers are, if they are lay people, they're not going to send them. You give a negative confirmation, like Lena said, it's going to go in the trash barrel. They only see one line. This is not a request for payment. And then they throw it away. Now, I have my own listing. It's kind of on yellow paper now. My own listing of when to use I like positives. Positives are more expensive. Who sends out the positive confirmation? Auditor should send them out, and they should be sent directly back. Client can prepare them, but the auditor should make sure they're sent out and they are sent back directly to the auditor. Now, positive if we have large balances. Positive confirmation, definitely. If there's reason to believe there are to be disputes, if there's reason to believe that there will be disputes, you went positive. Now, how could you trace that? Well, take a look at your client correspondence. If they've had a lot of letters, or let's say, or emails from their customers complaining, for example, about the quality of the merchandise, better have positive confirmations, because it looks like these particular customers of your client aren't going to pay the full amount due, or maybe they're not going to pay at all. Also, if you believe there's going to be irregularities or inaccuracies. Irregularities or inaccuracies. This could be based on the system of internal control or the competency of the person performing the function. The one I think that Lena said, I think is one of the best ones, are these likely to be overlooked or misunderstood? Now, if your client's customers are sophisticated major corporations that have an account payable department, then maybe the negative confirmations are more acceptable to me, because they're people like yourselves with accounting degrees who are working there, and they're going to check the amounts that are owed, because their company's payable is your client's receivable. Now, I also ask, and no one has responded to this, and there's some hogwash in the text here about sample size on page 535, but I don't like there. What determines sample size? Tolerable misstatement, inherent risk, control risk, achieved detection risk. Forget it. I have my own list here again. Factors that affect the sample size for account receivable confirmations. Number 1, the materiality of total accounts receivable. The materiality of total accounts receivable.
I'm sorry, what page are we on?
We're not on a page because I don't like it.
Okay.
We are avoiding, let me get this. We are
Okay.
avoiding page 535
Okay.
because they gave some academic hogwash here, and this is Bill's practitioner-oriented reasons for the sample size for confirmations of receivables. Number one, materiality of total accounts receivable. If accounts receivable are extremely material, then you're going to want to have a larger sample size. If they're immaterial because 90% of your customers' transactions are for cash, then they're not significant. So what's the materiality of total accounts payable? What's the number of accounts, of accounts receivable, as you were? Materiality of total accounts receivable. The acquisition and payment is next week's chapter. Number two, the number of accounts receivable. The number of accounts receivable. Let's say your client only has 30 total accounts receivable. Oh, what the heck? You might as well confirm them all. But what if they have 30,000? Then we got to do sampling. So what's the materiality of total accounts receivable? What's the number of accounts receivable? My third one is the distribution in the size of the accounts. The distribution in the size of the accounts. You know how this operates. Let's say that we'll confirm every account receivable over $50,000. But maybe for accounts receivable that are under $500, we'll do 1 out of every 20th. In other words, you're going to kind of rank it based on significance. And where are the more likely problems to be encountered? On the more significant dollar amounts, so you want to confirm those. And I would send positive confirmations, again, unless these were large corporate customers of your client. The results of the internal control review, I guess that would have an impact. It has an impact on every area of the audit. The results of confirmation tests in previous years. The results of confirmation tests in previous years. Have there been problems in getting these confirmations back? We'll talk about those in a few minutes. Has the client balked at us trying to contact some of their customers? What has been our experience? That's why it's good to talk with somebody from the prior year's audit team if you are not familiar with the client. Next factor, the likelihood of client bankruptcy and similar risks. Likelihood of client bankruptcy and similar risks. Clients having problems with their ratios, might go into bankruptcy, should be writing off some accounts receivable as uncollectible, but they're sure as hell going to be reluctant to do that because they're trying to have as strong a current ratio as possible and to look as favorable as likely. That's also part of the going concern concept, I guess.
So so when you're auditing it and you're trying to think like, okay, how do you know that the customer is in bankruptcy?
Part of it might be known from the media. Believe it or not, they often will indicate something, or you could look at stock prices. Nowadays with the internet, you probably could get a lot more information off of there as well. Look at a Standards & Poor's type record, or you know, even a site sometimes like the Motley Fool has something in that area.
But even with like not public entities?
Maybe not there. Maybe not there. Although there are some privately held companies where I've been reading how they're having difficulty with their sales projections. They're not meeting their projections, even though it's not a publicly traded company. The type of confirmation being used, I know negatives are real cheap, so therefore there would be a larger sample. But remember the warning that Lena gave us about negative confirmations based on your customers of your client. I would add the results of analytical testing. The results of analytical testing, I think, would be significant as well. Now, what happens if you send out confirmations? You send out confirmations and positive ones, and they're not returned. What do you do next?
Follow up.
Follow up. Send out another one. What if they're still not returned?
Call them.
Call them. Yes, excellent point. Perfect answer. Yes. Yes. Now, there is one way to avoid that, and that is alternative procedures. This is something I mentioned in an earlier class. What is the strongest alternative procedure that would satisfy me as an auditor that the account receivables are valid balances? What would convince me?
A check.
That's right, they got the money. Subsequent cash receipts. These people wouldn't send the confirmation back, they didn't respond to me, but they paid. That satisfies me. Money in the hand. Now, a lot of the differences in the confirmations that are returned and what your client is showing are timing differences. Customers made payment, but the client as of that date hadn't recorded the receipt. And they talk about some of these items on page 536, 537. And you also have to be careful here. I remember one time, customer says, we never received the merchandise. That's why we haven't paid. But FedEx had delivered it, and their tracking program showed that Mr. So-and-so signed for it. And you say, well, is Mr. So-and-so an employee of your business? Yes. Well, he signed for it on Thursday at 3:14 p.m. Oh, then they say, oh, I guess we did get it. So the tracking system that we have now really helps out again. But you can't have a you cannot have a single. I'm still talking in general.
Okay.
You cannot have a single account receivable confirmation with an exception that you do not investigate. You have to investigate them all.
Yeah.
Now again, to assist you as you're becoming more familiar, and maybe the fact that Barry's not here today doesn't matter as much because he has the most experience. But again, we have another audit program for relating to this sales and collection cycle, and it's on page 541. 541, table 16-5. I'm chilly in here again today. Is it just me? Okay, I was just gonna say here.
It feels like muggy. I don't know why, but every time in an air-conditioned room nowadays, feel like
Really?
sticky. I don't know what's wrong.
Oh, I don't feel sticky. I'm just looking for goosebumps or something here.
I knew when I walked outside of my house today that it was gonna get like a freezer in here. So I'm like,
Well, and it's supposed to be hot and humid today and tomorrow or something. So anyway, let's see what they have down here on this table 16-5. Review accounts receivable trial balance for large and unusual receivables. Calculate analytical procedures indicated in carry forward audit schedules. And follow up on significant changes from prior years. Remember we talked a few weeks ago about the continuing audit file, where you're tracking some information from one year to the next because it's going to have an impact on more than 1 year. Review number 3, the receivables listed on the aged trial balance for notes and related party transactions. 4, inquire of management whether there are any related party notes or long-term receivables included in the trial balance. Anytime we have related party transactions in any area, obviously those require special investigation and treatment. Number 5, review the minutes of the Board of Directors meetings and inquire of management to determine whether any receivables are pledged or factored. Remember when we looked at these objectives, there's one called rights and obligations, if I recall correctly. And if we pledged our receivables, they're collateral for a loan. If we factored them, It means basically we've been lent money from a bank, and any receivables that are paid off are going to go directly to the bank, and if any receivables are defaulted on, our client has to make good the default. 6, trace 10 accounts to the trial balance to the account receivable master filing for aging and the balance. 7, no, this will be done by computer. Foot 2 pages of the trial balance for the aging columns and balance, and any of that mathematical stuff or posting and summarization stuff is going to be done through the computer software. You don't have to bring out a 10 key and start adding. Okay, trace the balance to the general ledger. Trace the 5 accounts for the account receivable master file to the age trial balance. Confirm accounts receivable using positive confirmation. Confirm all amounts over 100,000 and a non-statistical sample of the remainder. 11, perform alternative procedures for all confirmations not returned on the first or second request. That was the phoning or looking at subsequent cash receipts. 12, discuss with the credit manager the likelihood of collecting older accounts. Examine subsequent cash receipts and the credit file on all larger accounts over 90 days and evaluate whether these receivables are collectible. And let's stop after 13 a second, I want to talk. Evaluate whether the allowance is adequate after performing other audit procedures for collectability of receivables. Be careful here, because you also have to be aware of what's happening in the vicinity of like a plant facility or where their customers are located. For example, let's say that a number of years ago, I remember an audit for what was Carson Peary Scott. It was their other part, Bergner's. I forget who owned them. But Bergner's is owned by the same company as Carson Peary Scott. And down in Peoria, it wasn't Carson Peary Scott. The department store was Bergner's, but same ownership.
Yeah, Bonton.
Oh, that's Bonton Stores, all right. And it turns out here, if you recall, this goes back in labor history, there was a long strike at the, what was it, Caterpillar plant. And so the workers were out for almost a year. They were getting strike benefits from the union, but a lot of them owed monies to Bergner's. And it turns out that they weren't paying Bergner's because they were out of work. They were using the money to pay their mortgage or rent and buy food. So you have to consider something like that. If a lot of the customers of your client work for Kraft, notice they're laying off a whole bunch of workers now. Those people aren't going to have a lot of cash available. That needs to be considered in the collectability and the allowance for uncollectible or doubtful accounts. So again, always be wary of what's happening in that industry or what's happening with the customers of your client. Then it says select the last 20 sales transactions for the current year sales journal and the first 20 from the subsequent years, and trace each to the related shipping documents, checking for the date of actual shipment and correct recording. That's more of a cutoff issue, isn't it? And review large sales returns allowances before and after the balance sheet date to determine whether they're recorded in the correct period. That's what I mentioned earlier. If they don't vary dramatically from one year to the next, you don't have to track them directly. But if they do, and you have a large sales returns allowances in the first week or two of the subsequent year, then make your client go back and track those back to the original sale. Okay, those were the 2 chapters. Let's go back and look at the homework in 14 and then 16, and then we'll see where we stand. I seem to be 1 chapter behind constantly. Next week we've got 1 short chapter, but well, if we have to do one chapter in that week 8, we will do it, but I'd rather not. I want that to be for the purposes of the exam, so we're all happy. Chapter 14, back to 14 again.
Okay.
Back to 14. Okay, 14:16. Let's see what that is.
page is that?
467. I'll have one of you help me on this one. What is lapping? Somebody, I don't know, Lena, was it you? Somebody had lapping in one of their posts. Maybe it was last week, I can't remember.
I don't think it was.
I think it's one of the questions that we had to answer, lapping and.
Oh, we had lapping and kiting.
Yeah.
But I saw lapping again this week.
Oh, it was me.
All right, see, I mean, but when the class is small, sorry. Tell us what lapping is in your own words. And Letitia's right, we also had it last week with kiting and lapping.
I just don't remember.
Okay, well,
I can, let me look at my post, it'll come to me. Let me
okay,
see
I'll
real
read
quick.
from theirs, but then I'll tell
Okay.
my own. Lapping is the postponement of entries for the collection of receivables
All right.
to conceal in the, okay.
So it's like-
Go ahead.
It's like a scheme where they take money, but then once the next payment comes in for something, they apply it to the first, and on like that.
Eventually, how do they catch up?
They have to go on vacation at some point. So
I was
then
thinking also,
someone.
I was thinking also they could take a customer who was a one-time customer who paid
mhm.
and
Oh,
write
okay.
out that person.
Oh, you mean
as
how do they get
uncollectible.
away with
Get
it? Yeah.
get
Okay.
even with it, right?
Yeah.
And again,
Well, they have
you
to
can-
do
you
something
can-
bigger
you can
at the
track
end.
the posting that Lena did, or the one from last week on that area. I've never really run into that problem, but I'm sure it can exist. Okay, 14-24. So put lapping in the Dropbox too. Put a paragraph in on lapping. Here we have page 469. 469. Internal control questions. And for part A, we want the transaction-related audit objective. I'll give, that's less important. B, how can we test the effectiveness of the control? C is, what's the potential misstatement? And D is an audit procedure. If they don't have it, don't have a control.
Okay, Bill, you went so fast.
Oh, well, A is going to be the objective. B is an internal control. How we can test an internal control. C is the misstatement that might occur if they don't have a strong internal control. And D is a substantive audit procedure to detect the misstatement. So an objective, an internal, how we can test to see if they have an internal control, because this is an internal control questionnaire. C, possible misstatement that they have weak internal controls. And the last part is substantive audit procedure, assuming they have weak internal controls, to detect the misstatement. Whew! Okay. Are customer orders evaluated for credit approval by someone independent of sales? For part A, occurrence, or existence if you prefer the other terminology. I know I use the word existence, and that's what they have for balance related. This is transaction related. They like occurrence, but it's the same thing. Validity would be another term.
What page are we on? I'm sorry.
469.
A is existing, B.
A is occurrence for one. B is select a sample of sales from the sales journal. Select a sample of sales from the sales journal. And determine that an appropriate individual approved the customer order. Approved the customer order. That would be the testing the internal control. But what if they don't have it? Well, for part C, sales may be overstated. Sales may be overstated if customer is unable to pay for the goods. If customer is unable to pay for the goods. Let me stop a second there. That sounds like if you're a company that gives credit to everybody, chances are a lot of those people are going to default. There's a commercial on TV for something to do with automobiles, 88. Your car was repossessed for non-payment, we approve everyone for credit. Well, they gotta have a hell of a lot of repossessors, because if these people have already had that problem.
Isn't that the same thing with like the mortgages, how they were like getting, the banks were just
Yep.
giving everybody mortgages?
Oh, yes, that's what gave rise to and then the bubble burst.
Yeah.
Yes,
Do
exactly.
you watch American Greed?
No, I don't.
We watched one where it's a lot of fraud, accounting fraud, where you have one guy that, and his wife, they actually, got so many people from Honolulu, Hawaii to invest in their company. It was
Just like a pyramid scheme then or
Yeah,
something?
he was in jail. His wife, he ran the scheme from the federal prison. And these people in Honolulu, they've had these homes in their family for decades.
And they lost them now, probably.
One of the
Oh,
people, I
geez.
believe, they took out $400,000 to give it to invest, and the wife paid it while the husband was in jail for 2 years, and then they noticed that the payments were behind, and they started questioning each other, because it was a close-knit community. So one person talked to another person, and that's how they started investing. But long story short, the wife never paid the money. A lot of people lost their homes.
Oh, I can believe it. And some of those schemes are done by somebody who's a pillar of the community.
Yep.
Or so that you would respect. Wow. Part D, examine sales returns and write-offs of accounts. Sales returns and write-offs of accounts during the year. Examine sales returns and write-offs of accounts during the year, and also review the aging of accounts receivable. Review the aging of accounts receivable. Let's be honest. If the terms were 210 net 30 and a receivable is outstanding 90 days, chances are you're not going to collect it. Okay.
Not always.
It's true. And some companies have terms where, for example, they allow 60 days for payment. Number 2 are online for Part A. For B, enter a sample of test transactions of online sales. Enter a sample of test transactions for online sales to make sure they're included in the sales journal. To make sure they're included in the sales journal. Remember, completeness is you go from the documents to the books. Existence was the reverse. This is completeness. Online sales in C may not be recorded.
This is 3.
This is 2C.